we've always had a blended service delivery strategy. We use both branches and technology. We think they complement each other very well. Different members have different needs, and we want to be convenient to all of our members. Some people like to interact with us with physical branches in place, in person, and others like to use the remote channels, so we use both. One thing that we've noticed is that even though over the long haul we think that the need for branches is very, very slowly declining, but we've still noticed that people have significant needs, and in particular when we visit a new SEG, for example, one of the first questions that people will ask us is, where do you have your branches? Are they convenient to me? People love to use technology, but particularly when they have a problem or a special kind of transaction that's unusual in nature, they often don't want to deal with technology. They want a live person to help them resolve their problem. Over the last 10 years, on average, we've probably opened up a new branch per year. We've done a bit more in the last 3 years simply because there have been more really good locations available than we had in the past. But in the last 3 years, since 2008, we've opened 4 new branches, and we've also moved 2 existing branches to better and larger locations. But currently we don't have plans for 2012. We step back and look at the region as a whole, and what we're trying to accomplish is a network of branches within the region that are about 10 to 15 minutes apart. We think that's about the right amount to provide great convenience to the members, but also be very efficient in terms of the overall network and cost. As far as where we locate the branches within that network, the first thing that we look at is where our members are located. I particularly like to look at a dot density map that we can do now that actually shows us geographically exactly where our members live. Beyond that, we look at commuter patterns, shopping patterns. We look at SEG potential to grow new members. We look at some security aspects, like whether the area is a high crime area or other special problems of that nature. And we also look at the type of branch that we want. In some locations we'll have a larger branch with drive-throughs on the outside. In other areas in this region, there are a lot more sites available that are strip malls, and so often we'll do smaller branches in those kind of places to expand our reach. The most significant thing that we've done in recent years with our branch security is implement the RTS units, and that's been a big benefit for us. So basically the member is coming in inside the branch, and somewhat similar to a drive-through, instead of meeting the teller face-to-face, he's actually interacting with a live teller but through a television screen, and it's a tube situation that they use to pass the transaction back and forth. We implemented the RTS units first and foremost to improve security. This is a fairly hot region for bank robberies, unfortunately, between Baltimore and DC, and we found that the RTS units were a great way to stymie would-be bank robbers, because they walk into a branch and they literally don't know where the money is or who to try to rob because they're just TV screens there. The member reaction, I think today, is very good. I think our members, for the most part, actually really like the RTS units. Initially, I'd say it was mixed. Some people immediately liked them, others just weren't comfortable with change. Probably the biggest 2 things that we learned from RTS units were, first of all, we didn't retrofit existing branches, so it was never a member takeaway. We were simply rolling the RTS units out as we opened new branches. So members could opt in or opt out. They could stick with their old branches if that's what they preferred. And that helped people, some people who might not have liked the RTS units initially, the fact that they had choices and could opt in as they decided they wanted to for convenience, I think that helped a lot. Another thing that helped was when we first opened those branches, we always had greeters at the door to meet members as they walked in. Members would come in literally and look around and not be sure that they were in a branch. And so the greeters were really helpful in explaining to them that yes, we had tellers, and they would walk through how to do a teller transaction with them. There were some cost savings. The RTS units are fairly expensive. The cost savings come in two ways. One, a single teller can work with two members at the same time. So the teller may have some downtime while the member is processing their part of a transaction, and during that downtime the teller can serve another member. And that's helpful. I don't think that's the more significant part of the savings though. The big savings that we found was in these cash dispense machines that we implemented at the same time as the RTS units. And they go between the tellers. Two tellers share a single cash dispense machine, and just the quickness with which they can dispense currency makes the transaction a lot faster and the teller a lot more efficient.